Joining us with this Ag Week Market Extra is Luke Swenson with the Money Farm. Luke, corn market obviously kind of hit a high this week, and some of it was due to fund liquidation, but we also saw an extremely high crop rating at 79%, good to excellent nationally. That matched the old record. So there's no place to go but down from here. So how does the market factor that in, and is there a disconnect because it didn't match up with yield last year?
We've been watching for a couple of years just how the market's reacted as we've gone through these reports. You know, we've been low 60s up to mid 70s, back down to finishing in the low 60s again, and there just seems to be a disconnect. You know, farmers are saying, well, they're playing the backyarditis game. That our area doesn't look as good and ratings are going down, we're not going to get the yield. But then every year we're coming out with a record yield. So even though we're starting at a high point where theoretically we probably should just drift lower as the year works, is the trade really going to care? And that, like last year we finished, I think, at 64 at the beginning of October when we were kind of really getting into the heart of harvest, and we finished 175 bushel corn yield. So if we have the potential to drift 15 points on this and still they can attach that to where we had 175 bushel yield last year, I don't see them really being worried unless they bump it up to 82 or 83 in the next couple of weeks, or they drop it down to 70. Unless there's a drastic move, I don't see the trade really following it too much or losing much sleep over it as they're watching the whole picture.
When you look at acreage and ending stocks figures, which are both expected to be lower, maybe ending stocks well under 2 billion bushels for this next coming year, we need trendline yield or above on corn here, don't we?
Yep, and that's like some people are already saying, we've got a drought out west in western Dakota, Montana, Saskatchewan, Manitoba, which is we're paying close attention to that for the spring wheat world. But we had a late start everywhere else. We sit and talk to, we've got customers, I planted corn May 20th last year and it ran 220 in Iowa. Well, that's not really going to hurt our average. So while we are optimistic about the start of this year on how crops are looking, and you got to put away the dissonance early on that, we're going to have sub 170 already. The genetics technology we've added, we're getting rid of a lot of little wiggle room issues that'll pull off a few bushels here and there. So even though we're back to what a more normal start is, we can still wind up with those near trendline yields. The nice thing is when you sit and look at it, say we come in at 174, you can make the argument for 1.4 ending stocks, 1.6, and over the last 5 years, when we had 980 million in 2012, basically to be the exact same world demand as a percentage of that, we're at about 1.2 billion bushels as ending stocks to match where we were at ending stocks for stocks to use in 2012. So the fact that we're sitting just a couple 100 million bushels off of that makes it pretty dang hard with political outlook, everything in there, even for us to push below $4. So we like the long-term outlook of it. Do we think we need to go to $5? No. But in the near term, we think we're kind of range bound and we should have some opportunities to push through and make some new highs.
So you buy on breaks in this corn market then?
I'm a fan of taking profit at technical points where we're at. We sold some more. We've been telling guys 4.25, 10.50, 10.60, get caught up on bean sales, and 6.50 on wheat, which we've been watching for a bit. And add some sales there. We always tell guys, okay, so if you sell 20% here at this point, say corn, you sell 20% at 4.25, and we go to 5.25. Well, if you sell the rest at 5.25, your average is going to be just right around $5. You're not missing a lot of opportunity costs for realizing a lot of profit early on. So happily take some sales at technical points like we're at this week where, it's kind of a coin flip going into the weekend with China. Do you really want to risk your whole farm's P&L on that? And then you can go out and, despite what the political climate is, ending stocks, volatility, all that, options are cheap. Buy some calls for 8 cents for the next 3 months and forget about it. Let it go away, and you got the peace of mind that if this thing runs, you've got the upside in place. Otherwise, you got profit protected.
Soybeans a little bit different because we're looking at more acres. In fact, some thinking maybe the acres were understated in the report at the end of March. And here, as we move forward, we do have all the political tensions and all that sort of thing working in the market. So what's your advice for guys that are growing soybeans?
We're sitting just under about half hedged, kind of right in the 1030, 1040 area between puts, calls, and cash. And we think it's a great spot to be. Could you make the argument that we can go back to 950, we wind up with 90 million or more acres? Yes, but I don't think the sub $9 talk of the spring is around anymore. That's kind of gone, barring China just completely walking away from the table with IP trade issues at the moment. That's the only thing that we think could really do it. Looking at ending stocks, we wind it at 90 million. It's still a story that keeps us in this 10.25 range and gives us some opportunities for little weather spikes to the upper 10s, things like that. So lock some up, we're looking at prices that are better than we've seen for the last couple of years, right in the heart of everyone planning for the most part, looking at crop conditions. You're in a great start. Take some of that and keep moving forward.
Hopefully you got some sold when we hit 1060 this last week, huh?
We got enough puts and calls on at 1020 and 1040 that we're content to let her work a little bit.
Spring wheat actually got above the 650 mark as well, and I'm sure there was a lot of sales that were made there. What do you see in ahead? Because there are going to be quite a few more acres of spring wheat for this year, right?
Yep, and spring wheat's been the harder one for us to actually get guys to do sales on. Because guys on the east side of the spring wheat country, they're just kind of content to let it run, because for the most part it's corn, beans, and wheat's on the wayside, so they'll combine it and they'll figure it out as they get closer, and you don't see them doing a lot of risk management in line with that. You get out west to western half of North Dakota, start heading north of Highway 2, up into Manitoba, Saskatchewan, and you've got a lot of guys that are very worried on no moisture. Like we've got a couple of guys we're kind of talking off cliffs, as they're just worried it's never going to rain again. Like, you guys are going to get some rain, but at a point out there's a few counties right now that they're at the coin flip of, well, do we keep praying for rain, or we just pray for it to stay dry and zero it out and take a big insurance check on some less acres? So with that, I don't think you're seeing percentage between crops, wheat being hedged like you are corn and beans, just due to that uncertainty, while it is one you need to be watching because there is acres. So they get moisture out there. What we've been telling our guys is, you see nice broad sweeping moisture across eastern Montana, western North Dakota, and up into the Manitoba-Saskatchewan border. You need to be selling some of this, because you're going to be cementing there's going to be at least a decent amount of crop coming on a lot more acres.
We are watching global weather, though. Canadian prairies, Australia, Black Sea areas are fairly dry, and we're watching just global weather this time of year anyways, aren't we?
Yeah, you've got issues in Black Sea. You've got the safrinha corn crop in Brazil, which is cooking at the moment, amid political and upheaval over there as well with the truckers' strike. We've got customers in Australia. One of them's watching a national park burn in their backyard because they don't have any moisture. So you're seeing a lot of places where there's little issues. The last couple of years, you've had a spot issue in the States, or the safrinha crop started out dry last year. Black Sea, I think 2 years ago, started out pretty wet, and you're going to have some damage there after a rough winter. This year, you're seeing little spot issues in a lot of places, which is good for us because it'll add some volatility. We just tell everybody, don't pray for a disaster. Pray for an opportunity, but $8 corn does us more harm than good. It give us $4.75 and run us back to $4.25.
All right, so futures are one side of the equation. The other side is basis. Where are the basis opportunities? When should they be locking in some of those?
Looking between crops, it makes a little more sense right now. Like if you're looking at old crop corn and you're in the Dakotas, where you're seeing the last couple of years, western areas have had 200 bushel corn. You've got ethanol plants, places out there that they've been making a killing because they've just been flooded with corn as guys have been growing more and having perfect seasons for it. Well, 16 and 17, that kind of went away, and the ending stock sitting in bends over there has really dwindled down, and you're starting to see a little bit of a repercussion as those guys are starting to scramble a little bit to source more bushels heading farther east. So you should see, if we have any scare at all on a weather scare this summer, you should see old crop basis ripple up, starting west to east across the Dakotas, as they're trying to source up that grain and figure out what they're going to do for this fall, especially when we've got growers out west that seasonally grow 3,000 bushels of corn, or 3,000 acres of corn, and they're down to a quarter. They just said enough of it. The last 2 years have been hard. Growing 100 bushel corn isn't fun. So you've got ethanol plants and end users out there that are used to 200 bushel corn for the last 5 years that they're cut in half, and their acres are going down as well.
So we've talked about the risks from weather, the funds, China, and political tensions. When you look at marketing and doing hedging, how do you evaluate risk versus reward then?
It's nice and easy when we're sitting at profitable levels. So, this year sitting at 4.25, where you're looking at 4.40, 4.50 for next July is great, because you're looking at $4 cash around here in the valley, which people haven't seen for 3 years. So it's nice and easy to be able to lock it up until some guys re-own some calls, kind of, helps you be a lot more comfortable with your sales and average up a little bit. So we're a little more sold than we've been, just due to the profit areas we are and how cheaply we can re-own. Normally, we're less than a third sold on stuff as we're going into the season, because we want to let it work, see what it's going to do, but it's given us some good opportunities. So even though we think there's good upside up there, we're not going to sit and hold on to 100% of bushels, because being risk management, income protectants is what we are for farmers. You need to take those opportunities when they come, especially at big technical points. Like, everybody's watched this week with bated breath kind of how Tuesday and Wednesday traded, and you really put some pressure on this market. And you can see what happens when funds say enough's enough and there's political tension. You can correct this thing 5-10% very quick. There's nothing wrong making a sale when you pull back 2% from a big technical resistance point, and if it falls off 10, buy some calls and let it run again, and you're just fine to go.
All right. Reward the market and be disciplined then.
Yes.
All right. Thanks for joining us. That is Luke Swenson with the Money Farm.